Hey traders, welcome to Charts and Coffee. Hope everyone is having a great morning. Caffeinate and dominate time. Yeah, I was just on Benzinga with the guys over there and some of the things we were talking about in terms of the year end. And I know there's a thought to sort of phone in the last month of the year. Things get crazy. Just exhaustion can be a thing. I can appreciate that as well. But when we take a look at the fact that we've got a number of indices that are showing very nice strength that could benefit from window dressing, whether that be the NAS, whether that be the S&P, whether that be tech, Microsoft, Meta, communications, financials have come on strong, XLF, or whether that be corners of the equity markets, whether that be healthcare or regional banks that we will consider weakness getting weaker. There are opportunities to short this market as well as get long. And it just reminds us that as traders, we've got to think about all the different indices and sectors and ultimately stocks, and that they're not all going to move together. It's not going to be overall one of those situations where we're talking about the market, but we're being specific to sectors, we're being specific to indices, and for sure, this is going to be a very looking very clear, very good price action, good volume going into the end of the year. So I'm very optimistic about this final month of the year, and I'm actually very optimistic about 2024. I think that hopefully a lot of naysayers and a lot of folks that were waiting for the markets to circle the drain kind of just started to trade what they see, not what they think. That said, though, remember those names that might fly to higher highs as the end of the year wraps up are going to be those very names that will likely be seeing some sector rotation, some profit taking, and then some bargain hunting. And chances are those things that'll be hit hard at the end of this year, regional banks, healthcare keep coming to mind, even maybe energy, they will look quite appealing as we start the new year. And the new year, well, we are expecting the Federal Reserve to go dovish and for the equity markets to benefit, from yields to benefit, from currencies to benefit, from some major central bank monetary policy action by way of one, if not two, quarter point rate cuts by the time we get to mid to late summer, July 31 meeting. All right, so let's get to it. As always, hey, I do want to remind everybody, I know we've all been shopping, as have I, going broke, saving money. But one of the things that I want to make sure everyone gets a chance to do, and I'm talking to my daily price movement range subscribers, my hourly price movement range subscribers, and my sector secrets mastery. Utilize the Black Friday, Cyber Monday window to or even any of the indicators that you've been wanting, whether it be something like the Volume Max toolkit, whatever it may be. Take advantage of this, because in my mind, take advantage of the sales. That's just that much more money that you can put into your account to come trade with us. All right, so let's get to it. As always, questions are best part of your show. Phone lines are open. By the way, my options folks, I'll be seeing you all at the open this morning. So we got a lot going on today. So first question is, good morning, good morning. All right, mind the gap. When starting to scale position size, okay, have I found it better to scale percent for your stop loss along with position size, or keep a specific dollar amount and still increase position size? All right, so mind the gap. What I do in the Holy Grail process is really simple. What is in your account? What is the account value? The account value, and then a percentage, a predetermined percentage risk of that is all that I am looking for to determine what my budget for a trade will be, because I work backwards. I'm working from what's the risk I'm willing to take, and therefore how many dollars worth of options or how large can I build a position based on, if I get stopped out, what is that going to cost me? And so it's always going to be position size. So I'm not sure if that answers your question, but I think it does. So my stop loss is always going to be the same fixed percent. I'm a big fan of fixed bet size. I'm a big fan of a fixed percentage of risk. I've tested that over the years. I found what works for me. And then I go back to the account size, and I determine what I'm allowed to spend. And so, of course, as my account becomes bigger, I can trade more. But let's say I run into a tough month. Then my account size will stay flat or maybe even contract. And then my position size again adjust. One thing that traders tend to do in a losing streak, as their account is contracting, there's less money in it, they tend to bet bigger. And this is a flaw I see again and again. It's a flaw that I see in sort of small account trading or large account trading. I don't have a different strategy for the size of my account. I just have a different risk percentage. So I think a lot of traders will oftentimes bet bigger as they're losing, which is pretty bad. That's, I was watching a final F1 race over the weekend. That's as if, the racer's the driver's getting into a corner too hot and thinks, all right, things are going bad. I'm losing traction. Let's just floor it. And that seems to be a lot of times what smaller account traders do. So not that anyone here does that, but I find that happens quite a bit. All right, what did I do with that swing trade on Intel? Swing trade on Intel. Gosh, that was a minute ago. The swing trade on Intel. We have put on so many trades in the interim. I'm drawing a blank. What did we do on that swing trade in Intel? But what did we do? I think we just had it expired. I don't remember anymore. We took profits. I think we took profits on it. Clearly, but I can't remember the expiration. I'm so many trades removed from that. Yeah, it was last week, right? We took profits. Bot's telling me we took profits. I don't remember. This is going to sound funny, and I'm glad you asked in a weird way, Munir. I know we hit our T1 and that moved to break even. I have a very short memory for my trades. When I watch golfers, and this is fascinating to me, when I watch golfers and they're in a tournament, 4-day tourney, they can talk about day 2 before the cut, the 9th hole, second shot. And I'm thinking, I can't remember what I had for dinner on Friday. I have a very short memory for trades. I keep extensive notes. I think many of you know that. And what that allows me to do is not live in the wins or the losses. I want to have a really short memory for losses, and I want an even shorter memory for wins. So over the years, Munir, I don't know how many of you do the same thing. I have developed a very effective amount of amnesia for my trades. And for those traders think, Rog, you do so much typing, keeping notes. It's as much for me as anybody else. You say Intel, in my brains, all I can remember is brisket on Thursday. I try to just completely wipe the slate clean in my mind. We had some huge trades in QQQ and SMH. Huge trades. And I'm already forgetting the details of those trades because I can't carry those with me because I'm going to carry a certain bravado and even arrogance into my next set of trades. And I definitely want to forget losing trades too. So I really get amnesia. I think they expired. There were November 17 expirations. Bot, I'll have to go look. And here's what's also great. I can go back and search my notes. So, it's an interesting question that brought in something that I am really, really a fan of, which is write things down, whether that be on things like Workflowy or in a journal. I'll keep things in a planner as well, and then forget whatever went well for sure, and forget whatever went wrong. And that's become almost, as you can tell, it's almost wired in now. So the only reason we get out of a lot of good trends is I just run out of time, Munir. At some point, the days to expiration is just going to close in on us. We just got to get out. And I do not roll in other such things. So I'll just be flat. So thank you for that. It just, it reminded me of something that I've trained myself over the decades to do, which is just have a very short memory for my trades. And I do. And there's a perfect example. I felt like a deer caught in the headlights. Intel. All right. Next up is Santa Claus rally. Hey there, Al. In a previous video, I mentioned a specific time window to pay attention in December. Sure. The Santa rally and it is something that happens in a very short period of time at the end of December. I heard people talking about Santa rallies in November. I'm thinking, does not anyone read their trading history or understand seasonalities, right? It's pretty hilarious. I guess it's still the same people running around saying, sell in May and go away. I love trading history. All these things have very cool backgrounds when you find all these things, these little nicknames. So Santa Rally. All right. Santa Rally is going to start this year on the 22nd. So just before the Christmas holiday. Usually I'll look at a day or so, the session before, and it will end pretty much right before the New Year's. A lot of traders will say the Santa Rally goes from Christmas to into the new year. I do not believe that is the smartest window for the Santa Rally based on my experience. This year, I think I was mentioning 22 to 29 because December 22 is the, let's see here. December 22 is, I think, the trading session before we go into the Christmas holiday. And then 29 is right before we go into the New Year's break. And any of the trading that happens into the fresh year, gang, that is not going to be big money, smart money, whatever you want to call that money. That is not going to be people moving significant capital. That is going to be a bunch of bonehead retail traders who saw that certain stocks surge into the end of the year, and they will buy that in the beginning of the year. Don't be one of those sheeple. It's tragic. I can try to help as many folks as I can, but what happens is, do you think that people who have millions upon millions, hundreds of millions of dollars in assets under management really want to buy Microsoft at all-time highs at the beginning of the year? Or are they going to say, I've got 12 months ahead of me now. I've got 12 months before I've got to really have that year-end report to my clients. Do I want to buy Microsoft hoping it still surges, or do I want to go shopping in things like XLE and healthcare, regional banks, things that are more in the basement, not the penthouse, and they have a higher chance of moving to the upside? And that's going to be, whatever we want to call that phenomenon at the beginning of the year. We have window dressing to window undressing. All of it really just is sector rotation, which is basically taking profit in those strong sectors, and those profits find their way to the bottom of the Ferris wheel, if you will, to underperforming corners of the market and folks bargain hunting, right? So there's a big answer right there, Al. But yes, it's the very last week between Christmas, but I do not let it roll over into the new year. That's really lower volume retail money doing, sadly, what retail money tends to do. All right. So there is that. All right. Next up is, let's see. Bear with me, gang. Do I like Melly today? Do I like Melly today? Well, first of all, I typically don't trade exceedingly expensive stocks like a $1,500 stock. I mean, not that there's anything wrong with it. When you say today, that would be day trading. Melly's going to be at about $1,500. This is going to be a $2,200, $1,900 option. So I don't trade Melly, period. Do I like it today? Not at new highs. Would have to pull back on the daily. If I'm going to day trade it, it's just very expensive. But if I'm going to day trade it, maybe keep an eye on the 200 exponential on the 5-minute chart. That's something I'll look at, but I don't want anyone thinking I trade Melly. I don't, my friend. All right. Next up is, let's see. Munir says, Munir says that Intel was last week. Munir, it's gone in my mind. QQQ and SMH are almost gone in my mind. Google and Amazon, I remember, pretty much gone in my mind. I really do try my best just to let it go. So yeah, you guys got to see really up close and personal. Just, I want those trades gone. I think a lot of times traders will hang on to certain trades, especially if they're good ones, and it starts to color their next action with either the fear of the loss that they just took or the sort of overconfidence, sometimes the gain they just had. So yeah, when people say get amnesia in athletics, I believe the same thing in trading. All right, JT says, to simplify things for me, okay, and all members, you could have everyone using TradingView. JT, thank you for that. I didn't think it was complicated, but I think that having TradingView is really helpful, especially for a lot of traders who don't have access to Thinkorswim. All right, moving on. Rainy days, Raghee. With a few bond auctions going on today, it depends on which ones. 10 and 30s are really important. And tomorrow, how much of an effect do you think they will have on price action this week? On bonds, Rainy days, probably quite a bit, but bonds have been pretty ignored by equities throughout the year, right? I think hopefully people will stop talking about inverted yield curves. How's that worked out for them? So I don't pay as much attention unless I'm going to trade bonds. So rainy days, if we get in, we start looking at TLT or ZB, IEF or ZN, I'm not going to be too concerned, but for sure, right? I'd like to see, obviously lower yields that reflect the macroeconomic potential reality of Powell cutting rates into the new year. 1 to 2 quarter point rate cuts by the July 31 meeting is what is reflected in the target rate probabilities via the Fed fund futures. So that would probably be helpful, but rainy days, probably not as much as you might think that I'll pay attention. It will be something I'll be aware of, but it doesn't factor into my trade ideas all that much. And normally they're in the afternoon anyways, and I'm done day trading by then. And the volatility that they create is not necessarily usually going to be all that applicable to swings. But in recent memory, which y'all know how bad that is for me now, I can't even remember the last time we might have used that hot zone. All right. Next up, good morning. Meta hitting a second deviation V score. Okay, let's jump on over there. What do I think about? Hang on, Sergio. I'm trying to figure out your question here. Meta's hitting the second deviation on the V score. Okay. On the daily time frame. So what do I think about shorting it on the 1 hour? I mean, what's happening on the 1 hour, right? Sergio, if I'm going to set up the 1 hour on Meta, I ask myself, all right, well, first of all, Meta's on an uptrend on the daily time frame. So let's not I love the V score. It's an indicator that I created. I love it. However, within the confines of an uptrend, I'm not thinking short at all. So I still need to set up Sergio, right? In the context of an overall uptrend, I can't short it. And on the 1 hour, it's neutral and it's oversold. So as far as a short, no, my friend, I'm not looking for one. Yeah, I'm not looking for one, a short. All right. IWM pullback looks good on an hourly. Well, I would look at the Russell futures to sort that out, And as far as a short or a good pullback, for a pullback buy, well, I don't have a trend on the 1 hour. I don't have a trend on the daily. So I guess my first thought is, before we get to setups, gang, I think a lot of times what's helped me the most is I ask myself, what comes before the setup? Why am I looking at RTY or IWM? And that symbol has to beat out at least 2 to 3 dozen other symbols that are vying for our money, aka attention. And I ask myself, of all the things that I could do, is that the best thing? So I don't even know if it is. IWM looking good because I'm going to go through the process of scanning. I'm going to go through the process of watch list building. I'm going to go through the process of this relative performance reliance that I have on, is that the best setup today? And then KRE is going to play into that. So I don't know yet. Because once we open up, I'll ask myself, is that the best setup of everything I can do? Is that the best setup of everything that I can do? And then we'll see if it could be a short. Who knows, my friend? I don't know right yet. And we're not close to a trigger either. So, and yes, I highly yes, gang, I'm a big fan of TradingView. If you haven't re-upped, I do every Black Friday as well. Just extend that membership out. It's always a great time to do it. BLP asks, do I offer daily live sessions? Yes, BLP, I do every morning in the Sector Secrets Mastery, which you can check out at sectorsecrets.com. All right. So yeah, copy that. So the process has got to be, let's start at the top of the food chain. So I'll give you an example. When the bell rings, I'll look at the NASDAQ, Dow, S&P, Russell. Then I'll take a look at the heavily weighted sectors. Then we can take a look at individual stocks. That's going to take about 10 minutes. And then I'm going to have a really good idea of what's a relative performer to the upside and to the downside. and then I can get to work. All right, gang. As always, thanks so much for being here. Be good to each other. I'll talk with you soon.